So the week sees indices start at recent highs and the dollar near 9-month lows after Friday's US jobs report created more posts in the US economy than anticipated. Let's remind ourselves of the numbers that we saw on Friday. 223,000 jobs created, markets expecting 203,000. But there was a small downward revision to the November reading. Unemployment rate falling to 3.5% from 3.6% in the previous month. Let's take a look at the dollar basket as we see things there stand ahead of the all-important inflation data out later on in the week. This has just seen a death cross. Now, this to technical analysts is a trigger point to sell this market. We've got support here at 103.08, as you can see. The death cross occurs when the 50-period moving average crosses below the 200 SMA, and that's exactly what we've got here. It's only marginal at the moment, but we see the MACD losing a little bit of steam, and this all, for me, continues to indicate that the pressure remains on the downside. You've seen a number of touches of this line at 103.08, and always what happens when you get the several attempts at a line, when you get a break, you normally then see a fair bit of trade on the downside. The next line of support is at 101.10, and the next big test for the greenback will be the consumer price index later on in the week. The market's expecting US CPI growth to have cooled in December to 6.5% year on year after a 7.1% rise in November. The expected fall partly driven by a drop in energy prices in the States. In December, motor fuel prices fell by 13%, but the cooling in prices is expected to be more broad-based. Core CPI, which excludes food and energy components, is forecast at 5.7% in December year on year after a 6% drop in the previous month. Just want to quickly catch up on some of the other major crosses that we got. This is the euro dollar trade. After big gains for the euro on Friday against the US dollar, the market's building on that at 106.73. Long on this with your stop below recent price action down at just below the 105 level. Sterling is making some big strides against the US dollar in as much as we're at levels not seen since the 21st of December. So we're 3-week highs there for sterling against the US dollar. And the US dollar is falling considerably against the offshore Chinese yuan, down at 67,757. Now, this is beginning to price in, I think, some positive activity for the Chinese economy as we look out towards the second and third quarters of this year. On Friday, we dipped below the 200-day SMA, and we're building on that negative move there at the moment. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.